On Market Sense is an IPO corner, and both the IPOs we'll be discussing are coming in from the defense space. These are two public sector units. Defense, of course, is totally dominated by the government, and this could help the central exchequer raise about 5,200 crore rupees. The companies in question, as you all would be knowing by now, Bharat Dynamics, which the price band is 413 to 428 rupees a share. And if you look at Hindustan Aeronauticals, that price band is 1,215 to 1,240. Let's discuss this further with Dheeraj Mathur, the partner and leader of aerospace and defense, I think, at PW. Hi, Mr. Mathur. Thanks so much for joining us here. My first question to you is, you're seeing two back-to-back IPOs coming out from the government side, from the defense sector, which is, of course, largely dominated by the center as well. It's 5,200 crore rupees in all. So, I would imagine that the appetite is not too large in question. But do you think this is a trend that's going to follow? You've seen hints from the government come in that they will be looking at defense companies to raise money.
Yeah. Hi. First, just a quick clarification. I'm a partner with PricewaterhouseCoopers, PwC, not PW. So just a clarification. Now, second, to answer your question, yes, of course, this is something unique. And this is also a trendsetter in the sense that I would expect more of the DPSUs to go public. I don't think there'll ever be a situation where the government would fully privatize a defense public sector undertaking for various strategic reasons. So I think the via media would be to have a limited, offering 10% or 25% or 30% to the public, and I think that's a very sensible thing. It's good for a DPSU or any public sector undertaking to get listed, because what it does is that it introduces the governance of the market, the discipline of the market. These public sector undertakings are owned by the government, and presently it is the governance system that prevails. And people often complain that there is too much government interference in a PSU, but the fact is that the government is the owner, so every owner does run and interfere or influence the management of a company that is owned by it. So once we get into public ownership listing, once we have these companies subjected to SEBI and other norms, we would see an improvement in the governance systems. We would see an improvement in the efficiencies that market discipline enforces.
Right. Can you also just tell us that, with such IPOs coming in, such sort of appetite that you're seeing? So we saw the insurance space, we saw the retail space earlier. We had before that seen the IPO of Indigo. Do you think the growth in the sector is pretty high, and that's the reason why, it would be the correct time also to get these IPOs?
Yeah, you see, absolutely, because look, BDL has a monopoly on manufacture of missiles. Now, the government does want to privatize defense manufacturing, but even after the private sector does enter, the DPSUs aren't going away. They're going to be, they will be there. Now, in terms of attractiveness, you see, they have, at this point of time, they virtually have a monopoly. They all have huge order books, whether it's BDL with over 10,000 crores or HAL, which is even higher, many times higher. So in terms of, revenue, they have assured revenue for the next 10 years at least, and they will always have revenue. And in terms of investment, these are unique stocks. I mean, they are at one level immune to the market, because the defense sector is always going to be a national priority. There's always going to be business for companies in the defense sector. So just as you mentioned, the civil aviation sector, which is another that in fact is more closely aligned to the economy, but the defense sector is by and large insulated, and so therefore I would expect these companies, once they start looking at efficiency improvements and so on, things that are ongoing. We have done work with some of them in looking at benchmarking their operations with global and national private sector companies. So once those efficiency gains come in, these would be, I presume, very safe companies as far as from an investment perspective.
Okay, Dheeraj, we're going to leave it at that. Thank you so much for joining us here. So that's the view coming in from PricewaterhouseCoopers, that these are very safe companies. Even if you see the strategic partnerships take off, private sector entering, it's not as if these companies are not going to continue to manufacture. Right now, of course, they are the largest manufacturers. The center holds the dominant position. But the IPO that has opened, Bharat Dynamics, here's Udaya Bhaskar, the chairman and managing director, now joining us. Thank you so much for talking to us here on ET Now. The total guided missile and torpedo market of India is pegged at a whopping $25 billion. The projection is that we're going to see a growth rate of about almost 5% a year until 2026. That's according to Frost & Sullivan. You're hitting the primary markets. How do you plan to take advantage of this growth? Talk to the viewers of ET Now that are mulling and considering investing in your IPO.
Yeah, I think that is the report of Frost & Sullivan, and definitely BDL is gearing up for this whole demand that's coming up and conscious about it. Almost 4 or 5 years ago itself, our preparation started, and one is we modernized our whole plants, introduced robotics, introduced quite a few automation in electroplating lines and various other lines, and we have invested almost about over 500 crores in the last 4 years. And so we are currently in 3 locations. All the 3 locations are modernized. One is in Hyderabad, another is about say 70 kilometers from Hyderabad in Telangana state, that's in Medak district, Banur, and the third one is in Vizag, that is in Andhra Pradesh state. All the 3, apart from modernizing, we also have been introducing 2 more new complexes to the BDL's manufacturing ability. One is in Ibrahimpatnam, that's about 30 kilometers away from Hyderabad in Telangana state itself. Another is in Amaravati, that's in Maharashtra state. And these 2 new complexes are coming up in view to cater to these new demands. Surface-to-air missiles, as is rightly said, is the segment which is really been required in a big way to the services, and that's where these 2 new weapons, apart from our current operation line like Akash, 2 more new weapons have been in demand and is expected to be into the production lines shortly, like say MRSAM, which is for Ibrahimpatnam, and like say Vishrod, which is for Amaravati.
Okay, and at the end of January 2018, you had an outstanding order book of 10,500 crore rupees. That's pretty much twice of the last fiscal year's revenues. Is that sustainable? What exactly is it that you're projecting for your growth in your order books? You know, this government is also committed to privatizing the defense sector, stabilizing its strategic partnerships. So is all of this sustainable?
Basically, our order inflows are at an average around 2,000 crores, and with big ticket orders coming into the company occasionally. Like say in 11-12, we had one such big ticket order of around 14,000 crores. Apart from our average inflows in the last 4 years, about 2,000 crores. That's why today our execution rate in the last year was 4,860, and we are expected to have again some more big ticket orders in the years to come. As I said, one is for Akash itself in its upgraded version for 2 more regiments, and in MRSAM, it's a new product line which is coming into the operations for all the 3 services. It is demanded for all the 3 services. Vishrod is again demanded by all 3 services. A new complex is coming up. A big order is expected. So these 3 put together, I think, would definitely be, apart from an average inflow of orders for our anti-tank weapons and torpedoes, is definitely going to have an exciting years for the BDL.
So your revenues have grown by 30% annually in the past 2 fiscal to reach 4,300 crores in FY17. Can you share the projections of revenue and operating margins for the rest of the year?
Basically, our major, ascendancy is coming in terms of gaining more and more operational profit, because more and more focus is coming on manufacturing. And I think last year, typically, it was manufacturing versus traded is about 70 to 30. In the years coming 2 years, we are expecting more and more manufacturing, and obviously, definitely the margins will be a bit. Definitely, it will be sustained, if not better.
When do you think the company will stop paying damages of contract value due to late delivery, since you've been paying 5 to 10% of contract value for the last 3 fiscals?
Yeah, basically, so these contracts are all done with some amount of development component in them. So the development component, as it matures, suppose if there are some times taken in that. So these are the ones, but however, by our accounting standards, we give them the provisioning, and then after that, once the reasons are being properly explained, these damages may come back to us actually from the government.
Okay, if I were to see from the analyst perspective, this year risk for the company as is dependent on just one customer with 98% of revenues, that is the Indian Armed Forces. Is that the way you will continue to be? Are you looking at any kind of exports? Is this going to be the only revenue stream? You know, let's not get nationalistic, but from a business perspective.
Why one customer? There are other customers like even Air Force and Navy also. All the three of them have been bestowing orders on us. Particularly LRSAM tomorrow is going to be an order from Navy, and say Air Force's order of Akash missiles is, even though it flows through BEL, but it comes to VDL, and so I think we will be having definitely addressing all the three services.
What is the key strategy and plan in place for the company over the next few years? Will force remain on investment in infra and R&D?
Basically, yes, you rightly said, R&D is one of our focal points. And of course, this is obviating more because of the new government's policy of allowing weapon systems to be exported. So we are also exploring export market. We have success in the last couple of years for exporting. We won the contract against a global competition for a torpedo, and so that we would like to field our indigenously developed products into the international market. So our R&D need to give more and more solutions utilizing the DRDO's capabilities of developing products. We wanted to complement that effort. We wanted to ensure that the timelines and all that, if we can matter in a big way, which is going to be directly affecting BDL's revenues, we would like to make a difference. So that's why we are strengthening our R&D. We are strengthening our marketing system for global marketing.
And you know, typically more than 60% of the company's revenue is realized in the second half of the financial year. Why is that the case, and is that going to continue?
Yeah, basically this year, the first half we will be normally talking about 40% of our revenue, second half 60%. I think we will be catching up in the numbers.
That's the big boss at Bharat Dynamics, exclusively on your channel, talking about the IPO. Wish you all the very best. We'll get you back once the IPO closes. You tell us about the response that's been received as well. So you're seeing actually quite a few IPOs come out over the next few days. You've got two defense ones, you've got Bandhan Bank as well. So stay tuned to ET Now. We will be decoding all of those on IPO Corner. For now, let's take a short commercial break.